This is Martin from Sept, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis, where we look at the technical charts and then try to understand what happened in the market in the previous week and also plan for a better trade for the upcoming week that's starting from tomorrow, Monday, September 15, 2025. So let's deep dive into the charts and see what had happened. Where's the market right now? So here on the left side you have the weekly charts of Nifty 50. On the right side it's the daily chart. So clearly within a trend line, market seems to be sustaining the previous week's reversal attempt, and on the short term it shows it's hit resistance zone, but it's attempting to make a double bottom breakout from that neckline. On the Banknifty charts, left side weekly charts are showing that it's a ascending wedge, and market has continued to sustain the previous week's moves and seems to be once again attempting to move towards the ascending wedge top. On the daily charts of the Banknifty, right side you see that it's a small trend line channel, and market seems to be moving up, long way to go towards the top of that small trend line channel on the daily charts. And let's see what exactly happened. So it was a 1.5%, that's 372 points up. Let's correct that with a plus, and here as well it's a plus. So it was 372 point plus, it's 1.5% up move on the Nifty, and nearly 700 points upwards, it's 100.3%. That's a pretty good move, and market seems to be in bullish mode. Let's further analyze and see what the candlesticks look like. And this is solid bullish candle that is formed on the Nifty. Right side Banknifty is weekly also showing solid bullish candles. Wide range bullish candles are bullish, of course. And daily, this is what happened in the last 4 days. It was some kind of consolidation on the Monday, Tuesday, and after that it was a big gap up moves that happened following that. And the rest of the week following the Trump's cooling down on the tax and expectations for some kind of deal that may eventually roll out. That's what the daily charts action is all about. It was continuation of the previous week's up move, and right now we also see that it's a W pattern. This is bullish, but the thing is it's at a resistance zone of the W. This neckline has to get breached. So 25,300 above only we can say that it's probability of a breakout, right? So that's something that did versus Banknifty is not as enthusiastic as the Nifty. You can also see that, right? But it also positively closed with a wide range bullish candle. So candlestick is extremely bullish. So that's the story. Now Bollinger Bands are showing that it is an expansion which indicates further up moves with bullish bias on Nifty. Remember, the low volatility is visible in the narrow bands, and this is daily Bollinger Bands that you're seeing on the Banknifty. Also you see that the bearish expansion on the downside is stopped, and instead it's a bullish bias attempt to up move, but the Bollinger Bands have not expanded. So it's consolidation on the short term on the Banknifty, while expansion on the upside, which indicates more further up move. So that's the Bollinger Bands. Let's try to understand what the momentum and the trend indicators. The RSI is used for the momentum, and the trend indicator is the ADX. And the multiple time frame analysis, what you see on the left side, you see that the market has gained the momentum, but it is still a long way to go before actually this sounds to be an old one. Let me just quickly check that. Yes, so this seems to be okay. The momentum is sideways on the medium term, still continue to be sideways. It has not come to the bullish zones yet, but when we look at Nifty in the Banknifty to the right side, which is the daily chart's momentum, that the RSI is climbed to the bullish zones, not yet in the Banknifty. So you can see Banknifty also is heading towards that. So overall, short-term momentum pickup is seen visibly, while the medium term has definitely reversed and attempted to move, but not at there in the bull zones. That's a summary of the momentum. On the ADX, it's showing that the short term, the momentum has crossed over the bullishness. It's not, that bullishness does not have enough strength, it's falling. And the medium term. It's the weekly chart is showing it's bearish itself with respect to the trend. So it's somewhere in the mid, you can say. Neither bullish nor the momentum is not too strong. Trend is also not too strong, but the short term it has reversed. It has made an impact. That's all that you can say. Right side, what you see here is the India VIX, which shows that a rock bottom is where the India VIX is at 10.12. Look at that, we had gone as high as 21 a few months back, and now we are at the rock bottom. So the fear is not there. This indicator VIX is, it's not an indicator, it's index. India VIX is actually hit the lowest of the volatility regime, which indicates that things may be good but may not be that great for the option traders when the premiums are so low. It's difficult to do short-term trades and make profit out of that, make note of that. But also there is a probability that a quick reversals from here from the VIX. That means, if it meets resistance at the crackdown, which spikes in the VIX can be expected to enter the rock column. Let's move ahead as if now things look rocky with respect to the volatility. And moving it in the opponent analysis showing it's a short covering. Short covering is positive bullish. The shorts getting covered into long. And both the dice are short covering. That means last week also I think it was short covering. So short covering moves could turn to long build-up, and that's when the variety begins. So and September 16 Nifty options weekly and September monthly expiries data is what is seen with respect to the option side. This PCR is 1.3 for Nifty and 1 Banknifty is overall PCR is bullish. Option side also for build up is bullish, right? So derivatives data is showing bullishness, and derivatives data is also giving us clues on the resistance and the supports. On the Nifty, it's indicating that it's a 5-point narrow range of supports and resistances. As you can see, 25,000 and 25,500. The second highest is at 25,100 and 25,200. And the Banknifty monthly is showing a wide range, 54,000 and 55,000, and that's where the highest put and call writing is seen by the big sharks, and 54,500 and 56 is the second level of highest put and call writing is seen. That's one way of looking at supports and resistance. Another way is to look at the chart straight away, and that numbers and the levels of the price levels on the dice is what is indicated here. Let's take a look at the technical chart. So we see that the price is at the top of the trend line channel and a breakout is possible, but there is huge resistance up till the 25,330 levels, and that's the place where the double bottom breakout neckline is there, and any price moves above that can be leading towards new all-time highs. But until then, we just have to face resistances, and there is a possibility that the reversal happens here towards the bottom of the trend line channel that you see here. So the first immediate resistance will be the swing highs at near the 25,154 levels, and after that you have the 25,222 and 25,333, and those are the levels of resistances. And after that, and then it goes, there's a long place for a rally if that breakout happens up till the 25,700 nearby, and there's a gap there at 25,750 nearby 740 to be precise. Similar to the downside, the exponential moving average is good play as supports, and 24 is where the 20 exponential moving average is previous. There's also a gap very close to that. That's at 24,891, but 25,000 week rounding number could act as a good support now that it's clearly taken out last week. In 24,824, as I said, it's 20 and the 50 exponential moving average comes there, and 24,681 is where the 100 exponential moving average is there, and if that is also given up, it goes to the previous swing lows, one here and one there, and then the 200 exponential moving average. That's where the supports are there. The levels are indicated here. Have a look at that in the Banknifty. If you look at that, it is having stiff resistance of the 100 and the 50 exponential moving average is right above, and after that it's rounding number 56,000, and previous high is very close to that at 56.98. So any breakout of that would mean that it has to take out the 56, 200, 300 levels. So supports similarly will be the bottom of that trend line channel that comes close to the 200 exponential moving average. As such, make note of those levels. It's clearly indicated here. 54,874 will be the resistance major, and 55,000 will be the major resistance to take out. Downside 54,650 to the exponential moving average would be the first major support, and that is breached. Then you have another gap that comes very down there at near 54,000. So that's about the Banknifty support and resistance level based on our options data and also based on the charts that we've seen. Let's move ahead and see how the different sectorial indices are the major ones that's listed here. You see the idea has recovered with a bullish candle after long corrections, and there seems to be probably some kind of up move. The price has climbed into the sideways momentum, rising up. So that's a range shift momentum. That's very positive. But there's no real divergence there. It's a range shift in the momentum. It's a good, powerful concept of bullishness indicator. So IT was lagging behind and pulling the markets down. IT is traditionally a defensive stock and it was not playing its role for some time following the tariffs and all this bad news that was flying around. Now it seems to be have closed with a very wide range bullish candle. So the metal also seems to have recovered and climbed to the bull zones, as you can see there with those green candles. The auto also has green and the bull zone. So it is the auto and the metal that is shining now as of now, moved in the bull zones in the medium term and the short term as well. And pharmaceuticals is also green and still the sideways but rising up, heading towards the bull zones. FMCG on the other hand has also maintaining and sustaining the sideways momentum. Realty sector also sideways flattish. So otherwise almost all the sector has realty had beaten on badly and that also has recovered. So FMCG, realty and pharma have and IT has recovered and metal and auto is shining. That's a nutshell. So if you want to take long bets, it's on the metal and the auto as of now as per the charts, technically on the medium term. Let's move and see how is it doing on the heavyweight indices. The HDFC Bank is showing some kind of bounce and maybe in the sideways, but not slightly indecisive there, but still on the top, not slided down too much. Lines also seems to be have managed to close green and not further dipped into the bear zones. It is sideways. ICICI Bank also sideways. So all the three major heavyweights, HDFC Bank, Reliance, and ICICI Bank, are maintaining sideways momentum. And IT has seen recovery and it was done well, but TCS is still in the bear zones in the medium term. Make note of that. Kodak Bank is also a countless stock and ITC is sideways hovering around, but its momentum has picked up and it's moving up. So overall, there's good recovery that has happened in all the heavyweight stocks. Board of market indices, small cap and mid cap, right? Like you see there, is also heading towards the all-time high once again, just like the market. The broader market also is doing well, gaining the momentum, but still momentum is sideways over the medium term. Some more time is to wait for to break out or hit the all-time highs or get into the bull zones with respect to the momentum. Now that we're seeing a lot of things in charts and all that, and let's see how the FIS did last week. The FIS have reduced the selling, but the net sellers, they ended up last week as well, 3,578 crores of selling. It is the domestic institution for buying last week as well, 25,000 plus crores in the cash market, and this week as well they've done substantially well. So domestic institutions alone is holding the market is a concern, but the fact that the FIS reduced the selling also is a positive thing to be taken. The derivatives on the long side is a number for FIS. That's what it shows. So FIS slightly reduced the selling, as you see, and it's a positive factor. Now let's look at the global markets, primarily the US markets and then currencies, and then some commodities like gold and oil. So that's how we get the global cues. And dollar index is slightly moved down 0.13%, which is positive. The dollar moves down and it's in the bear zones, it's positive 97.61, and we are an emerging country, so that's positive. At the USD the rupee has remaining the week, but USD has slightly moved up 0.12, it's 88.25. So rupee remains very weak even now, although the dollar has slided down slightly. And the crude oil also is very good levels for emerging market like ours. It's 1% up, but it's still below the 65 levels, 62.59 to be precise. So oil is remaining that levels. And look at gold. This is what actually happened the last couple of weeks, and it's a big breakout moves. Absolutely no corrections happened after 100% plus 110%. So it's now more than 120-25% of move for the last couple of years. If you see right from here, steady up move, breakout, that's all. So it's all-time highs on the gold. When the gold moves up, it's good for hedges, but it also warns equity traders that there is a possibility that money may shift from the equity market to the gold. Maybe shifting, so we have to be cautious about that. Gold at all-time highs with 1.5%, continuing with the previous week's breakout at all-time highs. Now let's look at the global markets. US markets is at all-time high as well. Dow Jones is all-time high. S&P 500, Nasdaq is all green, all-time highs with bullish momentum and rising up. All-time highs. US market, the other market is a very positive thing. So what is not positive is just this fear that voice gold bringing out just like that, and also voice rupee not getting much. So that's otherwise global news looks very good as of now, and that's about the analysis. Let's get into action numbers, and we have two stock picks for the next. They are both on the long side. One is Hindalco. One is placed on the upside for it. One is to RiskReward towards the top of the trend line channel. One is bullish. One is a good trend line. Trend indicator. It also is rising up momentum in the bull zones. Bharat Electronics Limited BEL is also one is to RiskReward trade towards the top of the trend line channel. Momentum is turned bullish once again, and trend is also good. Bullets are also decently good. The stock was long side, have tight stop losses though, as indicated. One is to RiskReward. Hindalco and Bharat Electronics Limited. Let's move to what FNO strategy is there. Please make note that these are not trade recommendations at all. These are just for education purpose, and I'm not responsible for any investments or trading that you involved in by looking at this video. This is for education purpose alone. Your risk, your money, your analysis. So you can take an input and you can cross verify and analyze on your own, make your decisions on your own. It's your risk appetite and use your analysis. Make note of them. This is a FNO strategy. That's Batman strategy that I come up with every week because that's the only one that in the short term works nowadays. It gives a decent range is what is good about this. It's 24,500 and 24,600 at these low premium levels. Now the strategy is giving as of now. It's not completely hedged, but partially hedged, you can say. Basically, we're selling OTMs and buying inside hedges, and if you want, you can take outside hedges as well, but then you don't have anything left in the profit. This is for one lot size. You can have as many number of lots as your risk appetite and your capital, basically. So it's RiskReward. But get out before then. No, don't wait for the last day of the expiry. Right, book your profits and then. So as long as you are in this range in the middle part, you get some small profit. If there's spike that's coming at the bottom line, you also make money. But get out in case it moves away from the break-even points at the end, both the calls and put sides. So that's FNO. Bad strategy on the weekly Nifty. It's time to wrap it up. Market seems to have sustained reversal from the previous week and then closed positive following the US tariff good news from the Trump, giving expectation for a possible trade deals. But FIs continue to be net sellers, even though they have reduced the selling last week. Some buying has happened. So remember that we still had not had great corrections. It is just an 18% and a 1200%. The nicest correction that has happened so far in a big rally of 2-3 years of 70-72% that we've seen. In the mid of that, interim corrections are coming 3 times or something, and then market seems to be once again heading towards the all-time high is what it looks like. Now, how do you come to a market view? We put the different parameters that is studied already in the previous slides into 2 buckets, one in the favor of the bulls and one in favor of the bears. So seems like the bulls have more items in there. Let's see one of them. India weeks is at rock bottom at the lowest of the ever levels, which means that there is hardly any fear left. As of now, the spikes are not there, so that is positive. Short of momentum on the dice bullish, trend is also bullish. Up in interest futures is short covering, that's bullish. Up in interest options PCR is also +1+, and that's positive. US market, some other market is green. Only balance from the Nifty is started to expand suddenly, and metal and auto sectors on the bull zones already. Others are following. And except for the TCS, all the major heavyweight stocks have recovered and maintained sustained the sideways momentum. Bottom markets are also having 2 weeks of green, and price is above the 20 exponential moving average. Now, what's in favor of the bears? The fact that there is prices that have stayed for resistance from very close by the neckline of a breakout. Neckline of a breakout of cup pattern, W pattern, and all of those. So parallel trend channel and all that. So that is where the tension is. That is where the bears are going to be betting on, and there is still bearishness in the momentum and the trend. The momentum and the trend in the medium term, the weekly charts are still showing that. So the full bullishness is yet to happen. Probably the next week will tell what the story is. Remember, the US tariff deal has not happened. It's only the expectations that maybe that market may be hopping on. So volatility can come in when there is change in those expectations during any of these days that's coming. So overall, my view is a mild bullish view, right? So that's about it. And for next week, I see 24,000 and 25,500 on the Nifty as the levels, possible price moves, and Banknifty 53,000, 56,000, 3,000 points is the price move that I expect maximum. And remember one fact, it's only about the 26,000 and 57,000 that we could expect another leg of the rally. Till then, it may be consolidation or having time corrections or technical corrections. So that's it. So always it's your capital, that's all that you have to protect. Expanding is all the trading is all about. So you can invest when those corrections are coming in, but always hedge your portfolio, hedge your positions mandatorily, because it's only the capital that you have got, otherwise you are out of the market. And also you can get rental income using the hedging strategies that we had discussed in the playlist. Check out that. That's all I have. If you like the content, you can subscribe and like and put in your comments and feedback, and also share it to others. I'm also active on the X. I regularly do the technical charts analysis and all that, so subscribe to that as well if you'd like. Thanks for watching. Happy trading, happy learning, and happy investing. Bye bye.